My name is Paul Locke and I'm the Managing Director of Flagship Minerals, an ASX listed company with the ticker FLG. Flagship Minerals is focused on securing and developing projects situated in superior strategic settings. Our portfolio comprises 3 projects. Our primary or core project is the Rosario Copper Project, a high-grade copper-silver project situated in northern Chile. Why are we interested in copper? Copper is the backbone of electrification. Copper concentrate supply is constrained. Copper inventory is critically low. The project pipeline is thin. There's been underinvestment. Permitting processes for most projects in most jurisdictions are experiencing delays. Most of these projects are massive, so the permitting process takes a long time. Mining companies and copper traders have been warning of a shortfall for many years. These warnings are growing in intensity. We're positioning the company to take advantage of what's got to be a big move in copper at some point in the future. We're focusing on nimble projects which will get us to cash flow quickly. The Rosario Copper Project is located to the north of Copiapo and to the south of Antofagasta. It's situated 10 kilometres north of the famous El Salvador copper mine, owned by Codelco and which has been in operation since 1959. In fact, Codelco has made a decision to invest about $1 billion in extending the life of that mine into the 2040s. So it's a well-positioned project in good geology. The project is in an infrastructure-rich setting. The project's situated around 2,300 metres above sea level, easily manageable. It's 130 kilometres from the nearest port, and the Inami oxide and sulphide copper processing plant is 100 kilometres to the west and a downhill run from our project area. We believe it's a Manto-style copper project, and Manto styles are responsible for a significant amount of Chile's copper production, keeping in mind that Chile is the largest copper producer in the world. The project has an area of around 85 square kilometres. We've conducted surface assays, rock chips and soils. We've generated a suite of rock chips with super high grades. The project has 3 distinctive prospective trends of 15 kilometres in total, and the zones of interest can be interpreted as 20 metres to 200 metres in width, with copper grades up to 8.9% copper. 50% of the rock chips grading greater than 0.1% copper average 2.06% copper and 12 parts per million silver, or 12 grams a tonne silver. 33% of the rock chips grading greater than 0.75% copper average 3.15% copper and 18 parts per million silver, or 18 grams a tonne silver. This is an incredibly strong suite of rock chips, and we're looking to build a copper portfolio to position the company and its shareholders for what looks to be a massive supply-demand gap. Our strategy is simple: to secure and develop projects which will position the company as a low-cost producer of copper and lithium, the metals that matter. How do we do this? Well, 3 steps. 1, secure and develop projects which are situated in low-cost jurisdictions and will position the company for high-margin outcomes. 2, projects which are situated in infrastructure-rich settings and which are proximal to industry, chemical processing and manufacturing. We're looking for projects which are situated near everything that we need. That's energy, water, workforce, all our inputs which make projects low cost, and of course ports and exit terminals so we can export and trade our product. 3, relevance. Projects which produce the metals that matter with deep underlying supply-demand dynamics which are favourable to the producer. That's the strategy in a nutshell. 3 key points: low cost, proximal, relevant. We're looking for projects which will survive the price cycle.